Tonight, let us drift into a story that is less about drama on trading floors and more about quiet manipulation carried out in the background of the global economy. It is the story of the Libor Scandal, a scandal that revealed how the very interest rate guiding the world's financial system was not as trustworthy as it seemed. For decades, Libor influenced the price of mortgages, student loans, credit cards, and massive corporate debts. It was the invisible heartbeat of finance. And yet, as we will see, that heartbeat was manipulated by the very banks trusted to report it honestly. To understand Libor, imagine a simple question. If one big bank were to borrow money from another, just for a short while, what interest rate would they pay? This rate was called the London Interbank Offered Rate, or Libor. Every day, leading banks in London submitted their estimates of borrowing costs. A committee collected these numbers, removed the highest and lowest, and averaged the rest. The result became the Libor rate for that day. It sounded simple, neutral, objective, but its reach was immense. Libor became the foundation for contracts worth hundreds of trillions of dollars worldwide. Mortgages in America, corporate loans in Europe, derivatives in Asia. A single adjustment of Libor, even by a tiny fraction, could move billions across the globe. It was invisible to most people, and yet, it touched nearly every household and business in ways they never realized. For years, the system relied on honesty. Banks were trusted to submit truthful estimates. But trust, as we know, can be fragile. Traders soon realized that by shading their submissions up or down, they could nudge Libor to a level that benefited their own positions. A fraction of a percent might seem tiny, but in markets measured in trillions, that fraction could mean millions in profits. During the financial crisis of 2008, some banks had an additional reason to manipulate the rate. By submitting artificially low estimates, they tried to appear healthier and more stable than they truly were. It was deception, wrapped in the routine of daily reporting. And because the system had so little oversight, this manipulation carried on quietly. For years, the truth began to surface after the crisis. Regulators, investigating the causes of the 2008 turmoil, noticed strange patterns in Libor submissions. Whistleblowers and internal documents revealed what had long been hidden: that traders openly requested certain submissions, that emails and chats recorded them joking about fixing the rate. In 2012, the first major revelations reached the public. Barclays, one of Britain's largest banks, admitted to manipulating Libor. Soon, other names followed: UBS, Deutsche Bank, Royal Bank of Scotland, and more. The world was stunned. This was not the work of a single rogue trader, nor a single institution. It was widespread, systemic, and global. The consequences were enormous. Banks faced billions of dollars in fines. Executives resigned, and lawsuits multiplied as investors and borrowers demanded compensation for the distorted rates. But perhaps more damaging than money was the loss of trust. Libor had been considered the world's most reliable benchmark. If even that could be manipulated, people asked, what else might be vulnerable? For everyday people, the scandal felt distant. Few had ever heard of Libor, and fewer understood it. Yet, it touched their mortgages, their student loans, and their credit card rates. The invisible thread running through their financial lives had been pulled by unseen hands. In the years that followed, regulators worked to rebuild confidence. New oversight was introduced. Traders faced bans, and in some cases, prison sentences. Most importantly, Libor itself was set on a path toward extinction. Step by step, markets transitioned to new benchmarks. In the United States, the SOFR rate, in Europe, the ESTR, and in the UK, the SONIA rate. By 2023, Libor was officially retired. An era had ended. The once mighty benchmark, trusted for decades, was replaced by new systems designed to be harder to manipulate. The Libor Scandal teaches us something subtle but profound. It shows that even numbers, seemingly neutral, objective, and precise, are shaped by human choices. And where there are human choices, there can be ambition, greed, and error. A single rate, invisible to most, shaped the cost of living for billions. For years it was quietly adjusted by those who stood to profit, until, finally, the truth came out. As you let your mind rest tonight, remember that even the strongest foundations may not be as solid as they appear. But also remember, the world learned, adapted, and moved forward. And now, this story can fade into the background of your thoughts. You can let go of the numbers, the banks, the scandals, and instead, allow yourself to drift into calm, safe rest. Good night, and sleep well.